get chatting with Nischal Maheshwari, CEO, Institutional Equities and Advisory at Centrum Broking, who joins us on the show. Hi, Nischal. Good morning. Thanks so much for joining in. Well, we've got a couple of IT numbers that have come in. And yesterday, at least the street digested HCL Tech as well as TCS numbers very, very well. Wipro's numbers are disappointing. The outlook as well is a little bit weakish. And as Rima told us, the employee count as well has fallen down. How much of it is in the price? How would you approach the stock from here on?
So, morning, Nigel. I think all the three are disappointing results, actually. I think, and the guidance is also 6 to 8%. If I remember it right, basically, yes, it has been discounted a bit. But I think initially when most of the analysts were on the street, they were projecting something like a 9 to 11% kind of a number. Now, I think that is downgraded to 6 to 8% kind of a number. And we have to see by the end of the year how we really pan out. I think most of this was already priced in, except for, I think, HCL Tech. Even I think Wipro is a bit disappointing than what the market was expecting. What I see here is basically yesterday's reaction is that people are trying to find out, given that the market has run away, what has not worked, what has not run away. And obviously, if you look at the stocks, balance sheets, management, top quality, all of them. So I think there are people who are trying to find bargain bets in this market. So that's why you saw this kind of buying coming back.
Okay. Nischal, morning. What about Federal Bank? The numbers were okay. The loan growth looks strong. The deposit mobilization has been very robust. The only chink in the armor was the contraction in the net interest margins by 15 basis points. And the stock sold off 5.5%. Though the management has guided for a NIM recovery, a margin recovery immediately from Q2 onwards. So the stock fell 5.5%. Would it, make the stock attractive post the correction?
Definitely, Rima. I think very strong numbers. And I think maybe a bit of miss on the net interest margin. But I'm saying they have been doing very well in the last 4 to 5 quarters. And they have been guiding pretty well. Even for the current year, they have guided 20% plus kind of a number. So I think it's any fall in Federal Bank is a buying opportunity.
Okay. Nischal, hi, good morning. This entire electric vehicle space is just zooming, right? I mean, we just heard about JBM Auto bagging a big 5,000 EV bus order. Then Olectra Green Tech is now in a league of its own. In this entire space, both from the frontliners as well as the broader markets, what tops your list now?
Morning, Sonia. I think as far as OEMs is concerned, I think there is only Tata Motors. They have done pretty well, basically, in the OEM space. So, especially in the car space. So I think Tata Motors is up there as far as electric vehicles are concerned. But I think more we have to look at the auto ancillaries more, basically, because there you really find a lot of plays available. So whether it is Sona, Koyo or JBM, I think there are a lot more plays as far as auto ancillaries are concerned in the EV space. So we prefer the auto ancillary space rather than playing the OEMs. So some of the names which I've given are there as a topic for us.
All right. Nischal, what about a couple of these new listings? Idea Forge as well as Cyan DLM. Both of them have moved just one way, rocket upwards. What's your view on those names from here on at these prices? And also, if someone had it, what would you recommend? Book some profit or continue to hold on to them?
So, Nigel, we were not the bankers to both these issues, basically. So, we have not done much work. So, hard to say for me, actually, to take some profits or not. Yes, stocks have done pretty well. So, I'm saying the natural instinct is to take away some profits. But sorry, I have not done much work to really say with authority whether to take up profits in this or not.
Nischal, have you looked at the entire space of smart metering? Stocks like HPL Electric, Genus Power, they've been flying. Genus Power got into a very large contract or a partnership with GIC as well. Today, we've got news that GMR Power, a subsidiary of GMR Power, has also got an order to install some more than 7 lakh smart meters. Is this space in a structural up move? Because stocks have already run up. Is there, are there more legs to run? And which stock would you bet amongst all of them?
So, Reema, I think we need to understand this space. Basically, the consumer is only government. So that is the only issue which I see out here. There is a long runway. I believe basically it's like multiples of whatever we are producing or have installed today. It is like multiples of that basically. So there's a huge runway for this. The only issue continues to remain basically that most of these consuming are state electricity boards who have got an issue about payments. Most of them are running into losses. So that is the issue basically which I see in this space. And that's why you don't see that the whole market is very gung-ho on this space. Yes, the stocks have done very well basically because they've got orders. But historically, we've seen, I think, challenges on payments, challenges basically, challenges on profitability. So I'm saying that is where the issue remains as far as this metering is concerned. But yes, I agree with you. It's a long runway. The only challenge being the government. So it is something like what you see mostly in the road companies and all. So you will get a certain multiple, but nothing beyond that.
Okay. Nischal, do stay on. I just want to quickly run our viewers through some of the important brokerage commentary that's come overnight. So let me start with Jefferies and Cholamandalam, where they've raised the target price to 1350 with a buy call. So significant upside from current levels. They see more upsides in the stock as it transforms from primarily an auto NBFC to a more diversified NBFC with multiple growth drivers that could make the company emerge stronger and less cyclical. The NIMs also, the net interest margins, according to them, are likely to bottom out. Federal Bank, the stock of the day yesterday, was down 5.5%. Morgan Stanley has an equal weight rating on Federal Bank. They believe the stock is currently not expensive, but it lacks a catalyst. So they have an equal weight rating on the stock and they prefer other private sector banks, their peers, because they believe the stock currently lacks catalyst. The miss in the numbers was the margins, because margins in Q4 had contracted 16 basis points. And yes, in the last quarter, in Q1, it fell another 15 basis points. They believe the NIMs are near trough levels, but the recovery will be gradual. Quickly run you through some of the other brokerage views on Federal Bank. Citi has a target price of 160, Investec hold rating, target price of 150. So broadly, I think the target price amongst the brokerages is closer to 150. And finally, Wipro. We spoke a lot about, Wipro, and we'll hear the management as well. Brokerages are disappointed by the earnings print. Morgan Stanley has an underweight call. Jefferies has an underweight call. Bernstein has an underperformed rating. Nomura is the only one which is neutral on Wipro post the numbers.
Okay, well, that's on Wipro and all the brokerages over there. But, let's just get our conversation going with Nischal yet again on a couple of more stocks. Nischal, I wanted your thoughts on some of these platform companies. Zomato has come back in a big way, and this year it's already up about 40%. Has that excited you? Not just Zomato, but even, some of these other names like Paytm, etc. And if yes, what would your pick of the pack be here for the rest of the year?
So I have been maintaining my view basically that the two spaces which excite me are obviously is the takeaways, which is Zomato and Swiggy. And my logic continues to remain there basically that both of them have spent close to around, I think if I'm right, close to around $5 billion each to reach this space. Now they are a duopoly. So challenging them now, basically somebody has to spend that kind of money to reach here. So I think this is a space which they have created, and I think it's got a long way to go. It will challenge the QSR model of the restaurants and everything. So I'm saying that this is a space basically which I'm very excited about, and I continue to believe as they get their profitability right, they have a long way to go. The second one is the Policy Bazaar. I think that's another space basically where they have created and has got a long lead over others. Where they have been able to create a very good platform for selling insurance, which is another very strong product. I think that's the first product which you've seen basically as far as fintech is concerned, which has been very successful. So I think these are the two places which I like at the moment. Paytm, I am not as sure at the moment basically how their business model evolves and what kind of competition they are going to face as they scale up. And what kind of margins, profitability, I'm still not sure about that. So I believe the Zomato and Policy Bazaar are the places basically I would put my money on.
Okay, all right, Nischal, stay with us.
But let's get Nischal Maheshwari back on board. Nischal, how are you feeling about the banks now? We had federal banks numbers which were not too impressive, but in general, the private sector banks have been doing well. Your thoughts on how to approach it and what would your pecking order look like?
So we continue to like the banking sector space. I think basically after almost a decade, as I think you have been enumerating at several occasions, basically that I think the balance sheets are clean. Most of them are fairly well capitalized. The economy is doing well. So I'm saying it's a perfect condition for banks. So maybe this quarter may be a bit weak because of costs going up and all that. But I continue to believe basically that a 15% kind of a positive number basically as far as credit growth is concerned is most likely to happen for the sector itself. Among the large cap banks, we like ICICI, HDFC and Axis in that order. And among the mid caps, basically our order is Federal, CUBK and Ujjivan. So this is the way basically we look at. And then on the NBFC side, basically we like Shriram, Cholamandalam and MMM Finance. So this is the way basically which we like the whole space.
Okay, all right. Nischal, request you to stay with us.